Mark, hi, good afternoon. How would you rate the Q1 earnings so far? And anything in particular that stands out for you?
I think, unsurprisingly, they've been, weak, but this was so well anticipated that the market's not reacting badly to it. I think if there's any one that has disappointed more than others, it's the profit warning from Sun Pharma. But I think that's probably more specific to that company because of its recent M&A. So, broadly speaking, unexciting, but also anticipated to be unexciting. Therefore, no market reaction.
So they have been uninteresting, is what you're saying. But when do you see the Indian market see a substantial improvement or a rebound in earnings?
Well, I think that the next leg will be for an improvement, but I can't say exactly when. And, not for the foreseeable future. If I said 6 months, I think that's probably about right.
So, Mark, it would be fair to say that the Indian market has been fairly resilient throughout the global jitters, and we have come out quite unscathed. So, from here on, do you see outperformance or underperformance for India?
I suspect that India would have performed more poorly had it not been for the domestic investors. So although foreigners have been taking some money out of the market, domestic investors have been putting money in the market, I believe, for 14 consecutive months. Actually, I should just check that. Anyway, for quite a long time. And I think the reason is because gold prices are falling. Bond yields have come down to levels where people think they'd rather own stocks.
Okay, so in that case, from the emerging market basket, would you expect to see rebalancing between India and China? I'm trying to understand whether you expect more flows coming into the Indian equity markets.
Well, I think that the crisis is over in China now, and I think if people were going to take money out of China, they wouldn't put it in India. They'd put it probably in Europe or the U.S.
Okay, Phil, we have written the Greek and China crisis, but what about the reaction to the next big global event, the Fed rate hike?
You'd have to think not good, because if the Fed raises rates, the dollar should rise, and historically emerging markets have struggled with the dollar. But I also think that the dollar bottomed in 2011 and has risen a lot since then. So in a way, it might have already priced in the Fed rate hike. I would say on balance, it is probably a neutral event because it has been priced into markets. The move on the part of the Fed will be very slow. And they're raising rates because the economy is doing well, which is not a bad thing.
Okay, then finally, before we let you go, Mark, for all our viewers, we would like to know what your view is on India and how would you sum up your investment strategy for the Indian markets?
I like India as a long-term investment for all of the reasons that we know, the strong demographic profile, the low leverage in the households. But I don't think that the market is going anywhere over the next 6 months. Sometimes markets just go sideways for a while. And frankly, that's the way I think most of the world's looking now. It's a situation where stocks are not cheap, so we need to wait for the earnings to catch up to find valuations low enough that stocks can take the next leg up.
All right, Mark. Thanks a lot for your time today. Well, let's